Nav is a legendary day trader, known for making millions out of his parents' bedroom. Yet few know the truth behind his early trading and his battle against the Matrix. To flee from a life of poverty in India, before Nav was born, his family fled to London, UK. But immigrating to a Western country didn't mean it was easier to get opportunities. Now, as a self-made day trading millionaire, Nav's eyes are set on forever changing the financial markets. Nav's parents bought a house in Hounslow in 1982, a few years after arriving from Punjab, India. Because it's next to the airport, house prices are cheap. His parents worked lots of jobs to make ends meet. It was the only way they could send Nav to a great college. They hoped it would improve his future. In 2001, Nav went to college to study computer science and math. To help lower the rent, Nav rented together with a couple of roommates. One of his roommates always had extra cash on him. Wanting to make more cash himself, Nav asked him where he got it. His roommate explained he had deposited a student loan into a brokerage account, and he was using the money to trade tech stocks. Realizing he could make more than a local supermarket job, Nav was fascinated. Soon after, Nav went online and started learning everything he could about trading. See, Nav had an obsessive nature. In high school, Nav was obsessed with FIFA, playing hours on end. Climbing to the top 200 players worldwide. Repeatedly playing against the same top players, Nav focused allowed him to pinpoint individual players' habits and develop counter strategies. If players played aggressively over the left wing, he changed into a four-man defensive position with his best defender on the right. As he read up more on trading, Nav opened his account, placing small personal trades and losing most of it. But it was a fair price to pay to gain the experience he needed. It wasn't until 2 years after uni that Nav made a decision that will forever change his destiny. Still living in a bedroom in his parents' house, Nav was working odd jobs. First working a job doing telesales at a company called Dialophone, then an admin job at Bank of America, mostly to help chip in for his parents when paying for groceries and bills. One evening, Nav opened the local newspaper when an ad caught his eye. Wanted, futures traders must work well under pressure. Seeing his parents struggle over the years and wanting to support them more financially, Nav worked to get the job. His goal? Make more money day trading than Warren Buffett. Trading firm IDT, that's where Nav applied. IDT wasn't exactly high finance. Picture Peaky Blinders, but gambling on stocks instead of horse races. To get in, Nav had to pass a grueling application. First, they got a 3-part test. Part 1, a quick and mental agility test. Part 2 was a test for pattern and recognition. And finally, the few who survived all that were grilled in a final interview on hypothetical trades. In May 2003, NAV and a few remaining survivors met in the office for the first time. Most of them were in their early 20s. Together, they faced months of simulation, theoretical explanations, trading psychology, and Paulo telling his war stories.
The price ladder. This I'm excited to show you because a lot of you probably never actually seen what order flow looks like. This is what we execute on. 80% of our trades come from what we see there. Why? Because that's the raw market. Everything you see in charts, in anything you read in articles, whatever it is, that's an extrapolation of what the market is, that this is the market. Bids on the left, price column in the middle, offers on the right. This is what we look at on a daily basis. In this video, I'm going to show you a month-end trade. On month ends, our traders really push their size because on month end is where institutions, hedge funds, pension funds, changing their books, trying to book in their profits. That's where you see a lot of order flow. So let's take a look real quick. You see at 44s, he saw seeing a buyer. He buys 80 lots. Now every tick is 800 euros. He sees a bit of a seller come in around, I'm seeing a bit of a seller at 46, 47. He's probably going to offer 47s. He offers 40 at 47s. He gets filled. He's trying to get 48s. He tries offering 48s, doesn't get them. He offers 47s again. A seller's coming in. He's leaving his offer in so that he can try and sell this. This is in minuscule time frames. Not even 5 seconds. That was 2,400 euros. This is the kind of price action we watch. The interaction between the bids and the offer. How the market's interacting with each other. When you see that price action, how are you reacting? How are you getting involved? And so sometimes, not all the time are we trading such big size, but when you know you can feel the edge in the price action, that's where you want to be pushing it.
After 8 weeks of tireless training, the rookies were close like brothers. They were finally ready to face the markets. "8 hours on a lone desk, he traded. He talked to no one. Besides the founder's office, everyone else sat together. The office news blasted through loudspeakers. Nav hated the negativity and the rowdiness of the office. He saw the importance of keeping his mind clear as he traded. His coworkers described him as absent-minded, sometimes starting his trading days forgetting to take his bike helmet off. Nav chased profitability. Nav started his trading in the S&P 500 E-mini futures. He arrived at the office at 2 p.m. till 9 p.m. to trade the US markets. Between trades, he often did pull-ups or played Football Manager on his phone. Nav's trading strategy was scalping, in and out multiple times every day. Unlike others, he didn't use stop losses. He called it letting his trades breathe. While riskier, it allowed some of his losers to rebound. It also meant he had to stay focused for hours on end. Nav didn't rely on traditional chart reading techniques or patterns. He didn't believe in them. Instead, his obsession lay in the latter. In video games like FIFA, his strongest opponents had habits in their playing style. Nav's focus was on identifying their habits until he found an opening. In trading, he did the same. He focused on watching the latter movements. Despite digital trading being anonymous, people had habits, recurring volume sizes and plays. By only trading the S&P 500 E-mini futures, he started recognizing the movements of its market makers. 9 out of 10 orders were never filled. Bluffs were everywhere. He was competing against the greatest traders across the globe. In 2005, IDT, the firm, relocated to Woking and named itself Futex. The firm was doing well, hiring more recruits. While the firm was doing well, not everybody was happy. The firm's founder was a man named Paolo Rossi. He founded it alongside his brother, Marco Rossi, and Dan Goldberg. Paolo had made his money trading futures in the London pits in the 80s. Now, he lived in a mansion and drove a Ferrari to the office. To inspire the newbies, of course. While some gravitated towards his charisma and his war stories, Nav didn't. Nav wanted to become the greatest day trader in the world, and he didn't think Paolo's experience would help him at all. Nav didn't fear his bosses. In fact, he thought they held him back. See, Marco Rossi was in charge of day-to-day management, and depending on the trader's performance, he would give them different capital and risk limits. Every time NAV achieved higher returns, we'd march down to Marco's office, demanding higher amounts of capital and higher risk limits. They often got into heated debates and cussed each other out in front of the whole trading floor. In fact, NAV would chew out anybody who dared to touch his enormous pride as a day trader. Paulo, Marco, other traders, nobody was safe. NAV knew the only reason they put up with it is because he backed it up with his trades. While some might view this as a toxic relationship, that forced limiter on NAV's pride and his unwavering confidence as a trader gave him time to fine-tune and improve his skills as a trader. The risk limits helped contain his aggression, and to get Marco to give him more money to trade with, he was constantly challenged to improve his skills. But while his trading skills were growing, so was his frustration. He could no longer hold them back. NAV vocalized his pride as a trader and his frustrations with society on the forums. That's Fugazi. That was his name on the popular day trading forums, with a picture of the Joker as his avatar. He often shared his views on common trading theories like Ralph Walton Elliott, known for his Elliott Waves and Elliott Waves Principle book. Although markets appear random, they affect repeating patterns of nature and Fibonacci numbers. NAV thought this was unconvincing and extremely limiting to rely on such a technique. Same goes for William Gant. He used principles from astrology and geometry for trading. NAV gave him even less of a thought. Even a 12-year-old could use this. He viewed the world as a matrix. After 4 years of perfecting his scalping on the S&P 500 E-mini futures, NAV had built up an account size of 400K. He had built up a rep where most don't even survive a day. Till one day, some odd ladder movements had caught his attention. With the news of an impending financial crisis in late January, early afternoon, NAV was at his desk. The S&P 500 had gone from moving 50 ticks to moving 5% a day. The financial news was bleeding into the markets. In the corner of his eyes, he noticed irregularities in the DAX, an index that tracks Germany's top 30 companies. He had recently started to play around with it for when the US market closed. Despite the negativity in the markets, NAV noticed there was a pile of buy orders waiting on the DAX ladder, and whenever the orders hit, they replenished. He had never seen anything like it, but then again, he wasn't a DAX expert. That's where NAV's comrade comes in, fellow Futex trader Young. Young joined Futex around the same time as NAV. He was the more charismatic of the two, often buying new rookies drinks on Friday nights. Young traded the DAX, it was his hunting grounds. Yet, he was also surprised. During the evening, when most markets went down, the DAX crept up. Somebody kept buying. NAV and Young noted that the market the following morning was 90 drops lower. Whoever was buying had given up. It was unbelievable. So they decided to build a strategy around it and short it overnight. They hit gold. For 2 weeks, they repeated the trade, hoping their luck would continue. Surged on by his wins, Young continued to trade the DAX throughout the day and gave a lot of his profits back, while NAV let it breathe and doubled down on his winning strategy. By mid-January, NAV's account balance had blown up to £1 million. On Saturday, January 19th, 2008, news came out about a 31-year-old French trader, Jérôme Kerviel. He spent his nights using the bank's money to buy longs on the DAX illegally until the financial risk team detected him. After an inspection, the bank realized $7.2 billion had been burned away by Jérôme Kerviel. When the news came out, the DAX sunk further. While the bank was near bankruptcy, NAV's account had reached a new level. But as he progressed, so did the system he fought. As some of you might know, around 2007 is when the market started to change. One morning at Futex, NAV started noticing peculiar movements in the ladder. The office was rowdy as a lot of his colleagues seemed to be on a losing streak that day. But it wasn't just that day. The months that followed were the same. Despite becoming a bigger player, Nav struggled to read the ladder. Spoof orders, faster fills, the market were changing. His opponents became so skilled that Nav thought they could see through the ladder. In reality, his opponents were no longer human. While Futex was hiring new recruits, others hired coders. Firms like Getco and Jump Trading, early quants. By 2008, the quants had become so effective, they became 1 in 5 trades. It didn't take long for exchanges to offer quants huge commission cuts. See, exchanges take commissions off every trade. Robots making thousands of trades per second are way more profitable. And these same exchanges are the ones responsible for policing traders. Founders of the CME group, like board member William Shepard, for example, was also a large shareholder in quant firms Jump Trading. They were the same people, Citadel and Jump. Faster scalping speeds and lower commissions, human players no longer had a chance. If a trade made the wrong move, it was the algos. It squeezed many scalpers out of the market. Nav hated the quants. To him, they weren't robots, they were the rich. How could he compete with a bunch of faceless billionaires? The markets were no longer a level playing field, where if you had a skill set, you could make money and change your destiny. Nav, like other traders, blamed a lot of his losses on the algos. While he didn't know it at the time, later he would learn some of the trades he complained about the most turned out to be human scalpers. Nav's frustration for trading grew, and so did his aggression towards authority. Nav's anger reached a boiling point. He went on strike. Frustrated with the markets, Nav felt the 90-10% split he was getting at Futex wasn't good enough. After getting into heated debates with Marco, things were getting ugly. Nav was starting to disrespect his bosses in front of other traders. Things had become unrepairable. After receiving a notice from the tax authorities, Nav's paranoia blamed his bosses. He wanted out. Over the years of Futex, he had built an account size of 3 million. It was time to cash out. But the brothers refused to let him go, claiming they first wanted to make sure the tax authorities were happy. After Nav got a big-ticket lawyer involved, the bosses cracked and gave Nav his money. Having lost his only form of a mentor and the limiter on his trading risk, the pitbull was now off the chains. After the fight, Nav was more frustrated than ever. His autistic nature made him even more paranoid, and he felt like the government was out to get him. Soon after, indirectly, Nav met some new affiliates and a man who went by the name Mr. Jesus. Mr. Jesus approached Nav with an opportunity to manage his money. He promised exponential growth, with annual returns of around 30% and a promise to eliminate his tax bill. Liking the sound of what he had to offer, Nav agreed to partner up. On Thursday, November 20th, 2008, the S&P closed at the lowest level in a decade. After finding himself a new broker at GNI, Nav rented a desk at CFT, a trading firm located next to the Tower of London. The financial crisis was peaking. 2 months had passed since the Lehman collapse, and reports came in the US government would step in. That Friday morning, Nav started buying futures. After a turbulent morning, things started to pick up. The following weeks, the markets rallied even harder. As news came out that the Treasury announced they would be putting trillions of dollars into Citigroup, Nav doubled down, thinking the market had further to go. His new broker was starting to get nervous. By now, most traders believed the recovery was over. And to make things worse, Nav was close to his margin limit and hadn't put a stop loss on as the US market closed. Fearing the worst, the next morning his broker called Nav. His mother answered the phone. After his mother woke him up, Nav told the broker to look at the charts and hung up. Later that day, the Fed announced $8 billion to ease the flow of liquidity in the market. The markets exploded, but instead of cashing out, he held. While enjoying a meal at McDonald's, the markets continued to rally. Nav made $50 million off this single trade. He was ready to put his new plan into action. Rebellion against the Matrix. On Friday, June 12, 2009, NAV emailed his broker to put him in touch with a trading technology expert. He followed up with an email titled Matrix, in which he described his exact requests. On-screen display, cancel if close function, alternate the closeness, one or more prices away, join bid/offer, you hit into orders but don't get filled, being able to enter the orders on multiple prices using one click, the abilities for my orders to rest on a particular side. If not enough volume underneath, it will pull while staying at the back of the book. This can be done by increasing/decreasing my order by one lot every time a new order is detected, to be able to enter an integer. Lastly, the abilities for my orders to only allow one clip to go into them. Hence, if I'm working on a 500 lot and a 2-lot trades, the 480 balance is removed immediately. Nav was up against an opponent much stronger and with way more capital than himself. He knew he could never build the software that could compete with the algos, but he had a better idea. The quants were followers, reacting in predictable ways. If he could mess with the robot signal, he didn't have to beat their speed. Instead, he could take back some control. The goal was simple: to distort the number of supply and demand enough to alter the algo's functionality, which would allow him to buy low and sell high. While placing fake orders in the back of the queue worked, it was hard to make a significant impact. Nav knew if he wanted to mess up the algos, he had to get closer to the best offer. If the orders filled, it would cost him millions. So he decided he needed to change his order every time someone would change their order, ensuring he always stayed at the back of the book, +1, -1 deviations, alternating to maintain his position size. To get it done, he partnered up with an engineer in New York, Antonio Hedrugales. The engineer touched down in London, and after a few meetings, was able to get the cancel if close option to work. But the back of the book functionality was proving to be more difficult. See, most high-frequency trading firms want to be as quick as possible. This was the opposite, so he said he would look into it. A couple months passed and he didn't hear anything from the engineer. In November, Nav followed up, saying what he made was already proving to be very useful. With a few close friends, and besides the occasional soccer game, Nav stayed inside for most of his day. Nocturnal, trading out a small bedroom in his parents' house. It's a wild idea to build a money printing machine and not tell anybody about it. The previous day, he made $435,000. That's more than his parents' house. Early in his career, he decided to not talk to his friends or parents about his finances. He worried they would treat him differently. A few weeks earlier, on March 23rd, an in-house member of the CME had picked up on his suspicious activity. Other traders that reported Nav's orders kept disappearing. He received a warning to stop. Nav replied, "Oh, sorry, I was just showing a friend of mine what high-frequency trading firms do on the bid side of the market almost 24 hours a day. Does this mean you're cracking down on them as well?" He continued using the program the next day. It was election day, and residents made their way to polling station. Britain was in a turmoil after the financial crisis. Unemployment was up 50%. Banks like RBS and Lloyds were in hot waters, and the economy on life support. All the uncertainty flowed into the market, which was good for trading. Between mid-2009 and April 2010, the global stock market bounced back from its lows. But the crisis had just exposed the EU pigs as they battled with their debts. The biggest was Greece. The country was pretty much bankrupt. On May 2nd, the EU Central Bank decided on a $1,455 billion lifeline. On May 4th, thousands of people started protesting. With panic emerging in the EU, large financial players started withdrawing their EU assets and diversifying into gold and fine metals. On May 6th, at 3:20 p.m., NAV turned his setup on. He activated the cancel if close feature and placed 4 sell orders totaling 2,100 contracts, starting 3 levels above the best offer, $1,163. They had a combined value of over $120 million. In the next 6 minutes, these orders were automatically closed and reopened 604 times. At 5:17 p.m., NAV activated the auto trader for the last time. Usually, he used it for 5 to 10 minutes. This time, He left it on for 2 hours and cracked up the size. He had 6 sell orders totaling his value to $200 million. In the final 2 hours alone, he traded a combined value of $3.4 billion, and he made a profit of $879,000. 1 minute after shutting off his trading program, the E-mini started to plummet with a velocity and intensity never seen before. It shed 5% of its value in 4 minutes. It looked like a steep cliff. The S&P 500 and its individual shares started falling. It was unbelievable. More panic emerged. At 1:45, the trading had paused, and the markets had fallen so deep that the automatic pause system had kicked in, and for 5 long minutes, trading froze. After the pause, markets climbed back at record rates, way faster than humanly possible.
Selling on the way down, and all of a sudden it just stopped on a dime. All of a sudden here we started hearing screaming, buy, buy, buy.
Governments and lawmakers got to work to uncover what happened. If you read the Wall Street headlines, it was the quant trading firms, a glitch that wiped trillions in value. By summer 2012, NAV had finally managed to improve his algo further, to the point of all his desired features. He found himself a new broker, R.J. O'Brien, since his last one had gone bankrupt. Over the years, Mr. Jesus had continued sending NAV updates of his money and had even set up offshore accounts for him. They also presented him numerous business investment opportunities, like new up-and-coming gaming companies in which he could invest. While he continued trading, the regulators were on his trail. They deducted from a recreation of the flash crash that there was a high-ticket player spoofing large volume sizes at MFM trading. On April 21st, 2015, in a joint operation between US and UK police forces, they arrested NAV. His life started collapsing. The tax pressures, the managing of business investments, and the offshore accounts, it had all become too complicated. It wasn't trading anymore. In prison, NAV's autistic character suffered. He struggled to maintain his mental health. When his new cellmate tried to hang himself, as NAV screamed for guards while holding up his legs, NAV broke. As his lawyers struggled to get $5 million in bail from his offshore accounts, they realized NAV was in deep trouble. His business partner, Jesus, wasn't a genius money manager at all. He had been running a pyramid scheme, paying old investors their insane returns using new investor money. Because the entire pyramid scheme was offshore, it was impossible to get his money back. NAV had lost everything. Before sentence, NAV asked to say a few final words. I spent 36 years trying to find happiness on a path built on a lie. I did things society said will give you happiness, and when they didn't, I didn't know where to look. Eric Aldrich put out a paper analysis on the flash crash and the S&P 500 E-mini trading data millisecond by millisecond. From his paper, he concluded that NAV at most had impacted the fall by 0.324 basis points. The free NAV became a popular tag for day traders on Twitter. It became clear that NAV had become somewhat of a scapegoat, taking the fall for much larger quant firms who also played an undeniable role in the flash crash. Amongst day traders to this day, many view NAV as a legendary trader who started with nothing and became one of the biggest traders on the markets, all in the comfort of his own bedroom. Thank you guys for watching, and tune in next time for another day trading legend.